Welcome back. In our top business story, the banking system of the UAE is in good shape and will be able to withstand any external shocks, Finance Minister Obaid Al-Tayeb said yesterday when the Gulf finance ministers met in Abu Dhabi for an exceptional meeting. Quote, "We're quite comfortable and confident of the resilience of our banking sector," he told Reuters after the meeting, adding that the country would always act to ensure confidence and liquidity in the banking system. Currently, the financial crisis in Europe and the slowdown of the world economy causes many banks, mainly in Europe, to cut down on lending towards each other, like back in September 2008, when a tighter interbank money market was one of the biggest problems the world's financial system faced after Lehman Brothers filed for bankruptcy. However, this does not affect the UAE. Asked whether the Arab finance ministers discussed the risks of contagion coming from Europe, Tayeb said that currently there was no need to discuss the issue. The UAE is among the top 30 most competitive economies in the world. That's according to the most recent Global Competitiveness Report issued by the World Economic Forum. It ranked the UAE 27th globally for competitiveness. The report classified the UAE as an innovation-driven economy. This is the highest stage of economic development that a country can achieve, and not only that, the UAE was the only Arab country to be classified in this category for 3 years in a row. Other countries in this stage of economic development include export giants Germany and Japan, Australia, the UK, Canada, and the world's largest economy, the United States. An increasing number of international perfume manufacturers move into the Middle Eastern fragrance market. This will let the Gulf perfume industry grow at least twofold over the next 3 years, Shahzad Haider, chairman of the Fragrance Foundation Arabia, told Reuters in an interview. Some even predict even faster growth because of the increasing number of tourists and business people traveling to the region. Already, per capita consumption of perfume in the Gulf region is among the highest in the world. Saudi Arabia is market leader. The UAE came in second with perfume sold last year worth $206 million. And let's now look at the stock indices across the GCC. And in our world business news, Italy's Senate late yesterday approved the government's widely criticized austerity program aimed at preventing Italy from facing the same fate as Greece. The plan, which has been radically overhauled a few times, now passes to the Chamber of Deputies, where it is expected to be approved in the next few days. International criticism has rained down on Prime Minister Silvio Berlusconi's centre-right government for the chaotic way in which it has responded to demands from the ECB for clear plans to cut its mountainous debt. The head of the Italian Senate Finance Committee said that the government may have to adopt further austerity measures in a month, as the current plan is unlikely to satisfy the ECB. We have Bruce Powers, head of research at Trust Securities, here in the studio with us to discuss the issue. Welcome, Bruce.
Good to be back.
Good to have you here. Now tell us, this austerity package that was passed through the Senate yesterday in Italy, will that in fact manage to rein in investors' fears that Italy could be the next bailout candidate?
Well, it's definitely going to help reduce the risk of a bailout in the short term, certainly. After the announcement, yields on Italian government bonds pulled back a bit after reaching the highest levels in over 10 years. But like you just said, there's a question whether the European Central Bank will continue to support the government bonds under this current package. So there's very likely to be some revisions over the next 1, 2, 3 months or so. So we may just be seeing Italy buying a little more time. Now, there's also the risk that they will not effectively implement the measures. We see this in Greece now, where they're having problems reaching the targets and the deficit targets and the privatization targets.
Let's look at the U.S. President Barack Obama will speak to Congress today on his ideas on how best to boost the U.S. job market. Apparently, he has a package plan, a stimulus plan of $300 billion US. Will that do the trick?
Well, I think it's questionable whether that will turn the unemployment trend and get the economy back on track. Back in 2009, the government spent $830 billion on a stimulus package, doing essentially many of the same things: tax cuts, infrastructure spending, and aid to the state and local governments. That didn't work. The second quarter of this year, U.S. GDP growth was at an annual rate of 1%. Unemployment is still at 9.1%, with the unofficial rate being much higher than that. And consumer confidence last month reached a 2-year low. So we have a lot of problems in the U.S. economy. Now, the other big issue is that President Obama has to get his package passed through Congress, where he's expected to have a lot of opposition from Republicans. Now, last month, we saw how well they're getting along during the debt ceiling negotiations.
Oh, definitely.
So I think there's going to be a lot of changes, whatever the proposal is, but at least it's a movement in the right direction.
Well, he wants to win the votes, right? Doesn't
he?
Okay, thanks for coming in, Bruce. Have a good weekend. South Korea's central bank left its main interest rate on hold at 3.25% today. That is the third month in a row, as concerns over the effects of the global economic downturn weighed more heavily than surging inflation. Bank of Korea Governor Kim Jong-soo forecast the domestic economy to remain strong, but said rates were being held due to volatility in global financial markets. South Korea's inflation has been above 4%, the top end of the central bank's target, for 8 consecutive months. And also the European Central Bank, the ECB, held rates steady as expected. However, the market has shifted its monetary policy expectations. The majority of economists now forecast a rate cut, maybe as early as November, and no longer a rate hike due to the ongoing debt crisis in the Eurozone and mounting recession fears. Before we go, here's a quick overview of the oil, precious metals and currency markets. And after that, we have the day's sports news for you.